Yo, what's up everybody? It's T-Sing, and let's talk NFTs. These digital assets have been blowing up, with some people making serious bank practically overnight. But listen, just like with any investment, there's risk involved. You gotta be smart about it. That's why in this video, I'm breaking down my top tips for investing in NFTs. We're talking maximizing your gains and avoiding those costly mistakes. By the end of this video, you'll be equipped to navigate the exciting world of NFTs like a pro. So, if you're ready to level up your investment game and potentially ride the next NFT wave, hit that subscribe button and let's get started. Alright, before we get into the nitty-gritty of investing, let's make sure we're all on the same page. NFTs, or non-fungible tokens, might sound complicated, but they're actually pretty straightforward once you break them down. Basically, an NFT is like a digital certificate of ownership. It's stored on a blockchain, which is like a public ledger that everyone can see, making it super secure. Now, here's where it gets interesting. Unlike your typical cryptocurrency, like Bitcoin, where one Bitcoin is always equal to another, each NFT is completely unique. Think of it like a one-of-a-kind piece of art or a rare trading card. This uniqueness is what gives NFTs their value. That value, my friends, is determined by a few key factors: rarity, demand, and utility. Rarity is simple. The fewer NFTs there are in a collection, the more valuable they become. Demand is all about how much people want it. If everyone's hyped about a particular NFT project, the price is going to skyrocket. Understanding these basics is crucial before you even think about investing. Okay, so you understand the basics of NFTs. Now, let's talk about how to choose the right projects to invest in. This is crucial, guys. You can't just go throwing money at every NFT that pops up on your feed. Trust me, I've been there, done that, and it didn't end well. First things first, you gotta look beyond the hype. Just because an NFT is trending on Twitter or getting shoutouts from your favorite influencer doesn't mean it's a solid investment. Remember, those influencers are often getting paid to promote those projects. You need to do your own due diligence. Start by digging into the project's website and white paper. What problem are they trying to solve? What makes their NFTs unique? Do they have a clear roadmap and a solid team behind them? Next up, check out the community. A strong and engaged community is a great sign. Look for projects with active Discord servers, Twitter accounts, and Telegram groups. Now, let's talk about two key factors that can significantly impact an NFT's value, rarity, and utility. Rarity is all about scarcity. The rarer an NFT, the more valuable it's likely to be. Think of it like a limited edition sneaker or a rare baseball card. The fewer there are, the higher the demand and the higher the price tag. But here's the thing. Rarity alone doesn't guarantee a good investment. You also need to consider utility. What can you actually do with the NFT? Does it grant you access to exclusive perks, unlock special features in a game, or offer real-world benefits? The most valuable NFTs often strike a balance between rarity and utility. Find projects that are building something meaningful and providing real value to their holders. Those are the NFTs that are most likely to appreciate in value over the long term. Now let's talk about the exciting part, making money with NFTs. The basic principle is similar to traditional investing: buy low, sell high. But of course, it's a little more nuanced than that. First off, timing is everything. You don't want to jump into a hyped-up project at its peak when everyone's buying. That's a recipe for getting burned. Instead, you want to try to get in early, before the masses catch on. This is where your research comes in handy. By identifying promising projects early on, you can potentially snag NFTs at a lower price before they explode in value. But here's the thing. Patience is key. Don't expect to get rich quick. The NFT market can be volatile. But if you believe in a project's long-term potential, it's important to ride out those fluctuations. All right, let's talk about safety. Because unfortunately, the NFT space is full of scammers just waiting to prey on unsuspecting newcomers. But don't worry, I'm here to give you the lowdown on how to protect yourself and your hard-earned money. First and foremost, always buy and sell NFTs on reputable marketplaces. Some of the most popular and trusted platforms include OpenSea, Rarible, Nifty Gateway, and Foundation. These marketplaces have built-in security measures and verification processes to help prevent fraud. But even on these platforms, you can't let your guard down. Before you hit that buy button, always double-check the contract address of the NFT you're interested in. Make sure it matches the official address listed on the project's website or social media. This is a simple but crucial step to avoid falling victim to fake collections. Another red flag to watch out for is unsolicited offers or messages. If someone randomly slides into your DMs offering you a once-in-a-lifetime NFT deal, it's probably too good to be true. And never ever share your seed phrase or private keys with anyone. You know what they say, diversification is key. And that holds true in the NFT space just as much as it does in traditional investing. You never want to put all your eggs in one basket, especially in a market as volatile as NFTs. So, how do you diversify your NFT portfolio? Well, there are a few different approaches you can take. One option is to invest in NFTs across different categories. For example, you might invest in some collectibles, some gaming NFTs, and some virtual real estate. This way, if one category takes a hit, you're not completely wiped out. Another approach is to diversify across different blockchains. Most NFTs are built on the Ethereum blockchain, but there are also NFTs on other blockchains like Solana, Tezos, and Polygon. By investing in NFTs on different blockchains, you can spread your risk and potentially capitalize on the growth of different ecosystems. You can also diversify within a specific niche. For example, if you're passionate about digital art, you might invest in NFTs from a variety of different artists. Now let's talk about a hidden cost that can really eat into your NFT profits: gas fees. Gas fees are essentially transaction fees that you have to pay to execute transactions on a blockchain. Think of them like the tolls you pay to drive on a highway. The problem is, gas fees on the Ethereum blockchain, where most NFTs live, can be notoriously high, especially during periods of network congestion. We're talking anywhere from a few dollars to hundreds of dollars per transaction. Ouch! So how can you minimize the impact of gas fees on your NFT investments? Well, one option is to look for NFTs on blockchains with lower gas fees, such as Solana, Tezos, or Polygon. These blockchains have been designed to be more scalable and efficient than Ethereum, resulting in significantly lower transaction costs. Another strategy is to time your transactions strategically. Avoid buying or selling NFTs during peak hours when the network is congested and gas fees are at their highest. Instead, try to transact during off-peak hours when fees are typically lower. The NFT space is constantly evolving. What's hot today might be old news tomorrow. That's why it's crucial to stay updated on the latest trends, news, and developments if you want to succeed as an NFT investor. So, how do you stay ahead of the curve? Well, one of the best ways is to immerse yourself in the NFT community. Join relevant Discord servers, follow influential NFT figures on Twitter, and participate in Twitter Spaces and Clubhouse rooms dedicated to NFTs. This is where you'll hear about upcoming projects, new trends, and valuable insights from experienced investors. Another great way to stay informed is to follow reputable NFT news outlets and blogs. Websites like CoinDesk, The Block, and Decrypt regularly publish articles and analysis on the NFT market. You can also subscribe to NFT newsletters that curate the latest news and insights directly to your inbox. Don't be afraid to experiment and learn from your own experiences. The best way to truly understand the NFT space is to dive in and get your hands dirty. Mint your own NFTs, participate in NFT drops, and experiment with different trading strategies. So there you have it, guys. Those are my top tips for investing in NFTs the smart way. Remember, this space can be incredibly lucrative, but it's important to approach it with caution and do your research. Don't get caught up in the hype, and always invest responsibly. And if you found this video helpful, make sure to smash that like button and subscribe to the channel for more NFT content just like this. Until next time, stay informed, stay safe, and happy investing.